Welcome back to my channel. Welcome to another business talk, and I am Chawanne Burns, and we are going to talk about buy now, pay later financing and how it is killing. It is totally killing Black women and Latino credit and financing. So that's what we're going to talk about today. Just a second, let me put some lip gloss on because I want my lip gloss to be popping. My lip gloss be popping. So yeah, that's what we're going to talk about today. And really, there was a report released at the beginning of the year from the Consumer Financial Protection Bureau, and we're going to talk about what the study that they or the report that they found out of how these buy now pay later financing, it might be a thing where, oh, I want this whatever you're trying to get, and it's really not good because they're not really checking the person's credit, and it's allowing people to get multiple financing. So we're going to look at this video first. This is by CNBC News, and it's explaining how they're finding out that, you know, they're trying to act like buy now, pay later financing is for the less fortunate or the people that really can't afford it. Is like a savior, but they're buying items that they really don't need.
A lot of credit card debt this year, rising to $841 billion in the first quarter. That is not the only way that shoppers are spending. The so-called buy now, pay later space, like Affirm and Klarna and others, is also booming. But it could be a dangerous place for people taking on debt, especially younger shoppers. Sharon Epperson joining us now with much more on this red-hot space, which I think is cooling off a bit, Sharon.
Absolutely. Well, Brian, you know, these point-of-sale loans have become a force in retail spending. They allow consumers to buy an item on the spot and then pay for it later in installments. 35% of consumers said they were at least considering using a buy now, pay later loan in May, according to LendingTree. And in April, 42% of buy now, pay later users admitted they'd paid late on one of those loans. Now, Kenneth Lin, the CEO of the fintech company Credit Karma, says these products create a major issue when it comes to understanding consumers' total debt burden. Buy now, pay later companies generally don't report to the credit bureaus when consumers use these loans.
Look, they don't report to the credit lenders. It doesn't help you out with your credit. Hello, some people misconstrue. Hey, if I get this buy now, pay later loan, they're going to report that I'm a payer, a good payer. No, they don't report on your credit. They only report when you're delinquent.
The challenge there is, well, you don't know if you have 10 other loans or just one other loan. And that makes a big difference in terms of how much you should loan, but at the same time, how much you potentially could pay back. And as soon as you start slipping backwards, you might be in that situation where, you know, that debt snowballs on you and you lose control of it.
And Ken Lin says that's when people get into deep trouble, Brian.
All right, so a lot of questions here, Sharon. First off, what happens if somebody's debt begins snowballing because they can't afford payments? We had Kevin Warsh on set the other day. He basically implied there's nothing they can do. They can't come after you. What's the real story?
Well, there's several things that can happen. They can charge you fees. They can also say that they don't want to lend to you anymore because you're not someone who is paid back. Or they could also do something where they're reporting it, in some cases, the delinquency or the default to the credit bureaus. They don't always do this, but there's several different ways they can go about it. They will come after you in some way to get the money. But the question is how that's going to happen and the impact that potentially could have on your credit history, your credit score, and what fees you may have to pay because you've made these late payments.
Is it good for credit scores? Are they bad? Are they checking your score every time you apply for like a Klarna payment?
Well, here's the issue. They're not going to build your credit. You're maybe doing this thinking, particularly younger consumers, as you were saying, thinking that they're trying to build their credit by using this. That positive history is not reported to the credit bureaus. Matt Schultz of LendingTree was telling us that actually what they're doing is occasionally, of course, they will report a default, a delinquency, a problem when you don't pay, but they do not report when you do pay. So it really is a lot more downside than upside for consumers.
So there you have it. It's a really more downside than an upside for consumers. Now, so reason why I titled this is because after reading this report, and this is from Consumer Financial Protection Bureau, they had a survey. It's called Making Ends Meet survey. And what they did was basically ask people who took out these loans what their situation were, what their demographics were, how much they made, and it was some alarming stuff that was in this report. Okay, when we talk about this buy now, pay later type of financing, is really you're overextending yourself. You're not really, number one, you're overextending yourself. And number two, the type of retail places that offer this buy now, pay later financing is clothes, shoes. You could even buy now, pay later on a flight. Buy now, pay later on a vacation, or buy now, pay later on an actual concert. So stuff that consumers really don't need. Now, if they had a buy now, pay later on, hey, I need to get my car fixed. Okay, that's reasonable. I need some brand new tires. I need to get my brake fixed. I could see that being reasonable. But you have a lot of retailers offering this buy now, pay later. You could buy now, pay later on your hair. So it's becoming really, really popular with millennials and Black and Latina women, the people or these women's that like literally make $20,000 to $50,000. And that's what this report basically said. And this guy right here, he's the director of Consumer Financial Protection, and he speaks at a hearing of the Senate Banking, Housing, and Urban Affairs Committee back last year. Okay? But this report came out, I believe, in this past September. You know, so they came out with this report this past September. And it was talking about Affirm, Afterpay, Klarna, PayPal, Zip. And they were getting, or they noticed that a lot of consumers are in debt. It said earlier this year, I reported on how the expansion of buy now, pay later services threatened legacy financial institutions by imposing higher merchant fees or retailers, thereby reaping greater profits. Retailers eat the cost, I wrote, because buy now, pay later users spend 68% more. They spend 68% more than what they normally will spend. And we're going to go to this TikTok video that I found, and this guy was explaining how much money is in the buy now, pay later financing. If you're offering that, how much money you could potentially reap from, you know, consumers, because they would normally not spend this money because they wouldn't have access to this money. Okay, so Consumers in many cases do not realize that the easy line of credit offered by the BNPL lenders was another form of debt without the protections afforded to traditional lines of credit. Okay, so basically they're saying if you like on a credit card, if you pay late on a credit card, they won't automatically deduct it from your bank. It's not unless you got an automatic pay. But if you pay late on your credit card, okay, you get an interest rate charge, but you still get that 30-day grace period to catch up on your payment. And also, I'm not for sure if they still have it, but I know back in the day, if you were like late on your payments with your credit card, they actually had insurance for consumers. So the insurance would kick in if you were in like some type of financial strain. Okay. So another protection that they offer with having a credit card is because it's reported on your credit. It's reported on your credit. And sometimes lenders would not allow you to overextend yourself just by pulling your credit. They will look to see, oh, this person is maxed out on their credit, so we're not going to loan her $1,000 credit limit. We'll probably loan her maybe $200, or maybe we could give her a secured credit card. And buy now, pay later financing, actually, to me, this is predatory lending. Okay, it's no way around to get. Type in the chat if you agree. If you have a buy now, pay later financing, and if you have multiple accounts. I have a girlfriend. She said she looked up and she was having like 6 payments coming out of her account, and she was wondering why she could never catch up. She was always broke until she said, okay, I'm going to stop spending and only spend what I have. And like I said, the stuff that they loan on, clothes. Do you really need clothes? How many clothes do you need? Like you after paying, what's the Forever 21 or Shein? Okay, so you after paying that kind of crazy stuff. It says investors are attracted to the BNPL services because of their use among early adopters of the Gen Z and millennials. However, the Consumer Financial Protection Bureau report shows that the adoption has grown across all age groups except for those who are over 51. Now, this is crazy, you guys. This is crazy. Once used for small items such as clothing, BNPL loans are now essentially for groceries, healthcare payments, gas, even mutations such as nanodegrees. I don't know what that is. Maybe some cosmetic surgery. Through the affirmed company Audacity, which builds itself learn now, pay later. Udacity, learn now, pay later. Okay. And the clothing and beauty merchants, once accounting for 80% of the purchases in 2019, represents only 58% in 2021. Even Chopra, which is the head of the Consumer Financial Bureau, said the usage of the BNPL has increased nearly tenfold in the last 10 years. Okay, it says the expansion of the market should come at no surprise because the announcement buy now, pay later can be compared to credit cards and the incorporate that infomercial style payment plan. Because they talk, oh, you don't have the money. Like literally when you go and like if you're shopping for clothes, they'll break you up your payment. Oh, when you check out, oh, you don't have the whatever $200, you could break up this payment in 4 easy payments of $44 a month. And you thinking like, oh my goodness, $44 a month. That will really save me. But then you keep on doing it. It's like a cycle. Then you keep on doing it. Then you go next week, and then you'll keep, break up my payment. My shopping cart is $250. Break it up in 5 easy payments, $55 a month. So you keep on that vicious cycle of putting stuff in your cart and spreading it out over 5-6 months. And then you look up, hey, I got 5 buy now, pay later financing. Or you look to see, you're approved for $1,000. Then you go back and put more shit in your cart. So it's really, really killing the middle class, lower to middle class, because in this report they're saying $20,000. If you're making $20,000 to $50,000 a year, those are the people that they're targeting. So while increased shopping is not necessarily a bad thing, because on the economy, on the consumer side, the CFPB report highlights that the rates of late fees has increased alongside the rate of loan approvals, meaning more people are assessing credit they cannot afford. For example, the report points to consumer using credit cards for their BNPL purchases, potentially accruing interest through the former if they don't pay off their credit card balance. On a supposedly interest-free BNPL. So basically what they're saying is you go in, you check out with the firm or Afterpay or Klarna or whatever, and instead of linking it up to your checking account, you link it up to your credit card, which your credit card has already a 19 to 27% APR. So not only you paying, you're thinking interest free, but no, if you link it up to your credit card, that's a double whammy. So now instead of paying $200 for clothes, you're paying $260 for some clothes because it's a 30% APR on the balance that you didn't pay. You see how that works? So it's a double whammy, and people don't understand that. For example, the reports consumer using blah, blah, blah. We already read this part. Potentially accruing interest on supposedly free, interest-free loans. Paying for credit with credit. And that's one of this is a big problem, is because a lot of people, they don't understand. We don't teach financial responsibility. I didn't learn financial responsibility growing up. They didn't teach that in school. We didn't learn how to balance a checkbook. You pick up your parents' habit of balancing the checkbook or managing your money. So if your parents don't manage their money properly, how can you manage your money properly? I literally taught myself how to manage my money, because my parents, they struggle with money management, and probably their parents struggle with money management. And just because you don't have a lot of money, that doesn't mean you should not manage your money. Let me repeat that. Just because you don't have a lot of money, that doesn't mean you should not manage it. If you can't manage a little money and you asking God, Lord, send this, Lord, increase my income, the Lord is not going to increase your income. If you can't manage a little money, how do you think you're going to manage a lot of money? Okay, so let's move on. It says while the huge piece of the BNPL business model reports also states that the revenue from late fees rose from 4.8% to 6.99%. So on the issue of the return policies, one consumer told the CFPB that the lender refused to acknowledge and follow their own dispute policies, instead placing the blame on the consumers for not trying to contact the merchant instead. This inconsistent consumer protections are exasperated by what the CFPB calls loan stacking and sustained usage, referring to borrowers who take out several loans at once and are unable to pay them. Others face the risk of being unable to keep up with the rent, utilities, mortgage, auto loans, and student loans in the short term. Delinquent borrowers can kick off their BNPL service. In the long run, sustained usage of high risk has the risk of continual access to an often increasing amount of the BNPL credit and personalized product discovery engine, unlike the loan. So it's like loan stacking. That's basically what people are doing. I mean, this is a long report. This is a long report. And I could put this in I could put this link in the description section for you guys to read. But like I said, it's a long report. Now let's look at this other TikTok video that I found. And they call it a crisis. Then they're saying that this buy now, pay later is a crisis. And they posted this back.
Buy now, pay later is the equivalent of the subprime crisis brewing for millennials and Gen Z. And in California, 9 out of $10 of all consumer loans issued in 2020 were buy now, pay later loans.
Did you hear that?
Consumer loans issued in 2020 were buy now, pay later loans. And in California, 9 out of $10 of all consumer loans issued in 2020 were buy now, pay later loans.
9 out of $10 of loans issued were buy now, pay later loans. That's crazy. So these companies, they're eventually, I call them like loan shark, buy now, pay, like these cash advance type places. But only on cash advance, they hook up to your checking account. With the cash advance, you can't just go in there, get a cash advance and give them a credit card. They want your checking account. So sometimes they end up collecting. But the buy now, pay later, they not collecting.
Gen Z consumers have spent 925% more through point of sale services than in January 2020, because they walk up in a Free People going to Coachella and they say, are you sure you only want to buy a $40 outfit? You can buy a $400 outfit and there's no credit check right now. And like all of these things, there's mendacious societal impact. 28% of Black and Hispanic Americans signed up for at least one point of sale loan in January 2022, compared with 14% of white Americans. And a lot of people on both sides will say, it's not fair of you to infantilize certain segments. But the reality is young men and women of color are getting into more and more debt because of BNPL. Buy now, pay later is the equivalent of the subprime.
So, and he highlighted like 29% of Black and Latino is suffering from these buy now, pay later loans. And it's really crazy. It's really crazy. Now this just came out March the 15th. This is another CNBC report. And it just came out. It says the new CFPB reports reveals that the credit habits of buy now, pay later users, here's what you need to know. That people can't really afford it. That basically what it boils down to. People taking these loans out can't really afford it. And when was this taken? Oh, this is March the 23rd. Okay. So this was just out in on March the 23rd. I'm saying March the 23rd, but March of 2023. It says BNPL refers exclusively to a zero interest pay in 4 or fewer installments. Remember I told you that. Pay in 4 or fewer installments. You know, zero interest free at a point of sales. These credit products differ from the traditional installments in important ways. The average loan amount is $135 over the 6 weeks compared to $800 for additional installment loans over 8 to 9 months. It's offered at 0%. Okay. We used consumer responses in 2020 for making ends meet survey to identify paying for borrowers. So listen, 69% of BNPL borrowers were revolving on at least one credit card at the time of the survey, meaning that they carried over a credit card balance from a billing cycle to the next. The credit card revolvers, the interest rate starts immediately for a purchase. So even for a 6-week pay in for purchases, credit cards are much more expensive than zero interest. We know that. Therefore, they may choose the zero interest BNPL financing over the revolving charge card. So basically what they're saying is the consumer had a charge card, but they still opt out for the zero interest fee loan, only because they thought that they will be able to pay the loan within that zero interest free time frame. But does that typically happen? I've been in this situation. Do we typically pay off in that zero interest free period? No, we're going to make the minimum payment. We're going to, try to do it, but then life happens. Something happens. You had to do something else. Whatever it is, you never do it. Okay? So now you got 2 bills. That credit card that you making a minimum payment for, and then your buy now, pay later financing. So it says for non-revolvers, the proposition of the BNPL is generally at the most a 2-week interest-free extension on the deadline for repayment. And non-revolvers do not begin paying interest until the end of the grace period, which is typically the billing cycle. So it says the users are being charged on the average of 22 to 24% for the who are using their revolving credit cards. So it says frequency of BNPL use among consumers in making inmates survey. Figure 1 illustrates the frequencies of which consumer reports using BNPL. In line with the recent study of the Federal Reserve Bank of Philadelphia, we found that the majority of the BNPL borrowers use the product only 1 or 2 times, perhaps experimenting with it. 10% of consumers, 58% of the BNPL borrowers reports the frequency use. Approximately 23% of the BNPL borrowers, 4% of all respondents, said they used the product 3 to 6 times, and approximately 17% of the borrowers, which is 3% of all respondents, used the BNPL 6 times or more. And so they're saying that prevalent, so the BNPL is most prevalent among consumers with incomes above $20,000 but less than $50,000 annually, and least popular among those with an annual income above $200,000, with the difference of 14% points. BNPL financing may appear more attractive to lower income consumers who find the interest-free installments are more affordable than making the entire purchase at once. We already discussed that. Hey, I could spread this payment over 4 installments, and now I have a little bit extra cash. Even though I was planning to spend $100, now I got that little extra cash. Or I wasn't planning to spend $100. I was going to plan to put it on my charge card, but my charge card charges me 20 to 29% interest. So, but now I got that extra cash. I don't want to use my credit card. I want to keep that open and have this other line of credit. So women are more likely to borrow from the BNPL. 20% compared to men. 14%. Black, 26% consumers are more likely than white, 16%. Hispanics is 24% more likely than non-Hispanics, 15%. So they're saying 15% non-Hispanics will more likely use it versus 24% Hispanic and 26% of black women will use it. So, and the data showed that the financing is prevalent among consumers age 65 and older to consumers younger than 65. Nearly 22% consumers below the age of 35 borrow using BNPL, in contrast to approximately 10% of those over the age of 65%. Finally, 22% of renters use BNPL compared to 15% homeowners. So they broke it down. They looked at who's owning a home, the age range, and it looks like if you're below the age of 35, it looks like they charging a lot for that BNPL. On average, it's about 20. That looks about 23% below the age of 35. Okay, so these group averages are unconditional and do not control for the characteristic of the consumers that are correlated to the BNPL. This is kind of like really technical, but I did want to point out what they're saying. After controlling for the other factors having at most a high school degree and a super prime credit score are most negatively associated with the likelihood of the BNPL use. Being black, Hispanic, female, having a household income of $20,000 to $50,000 annually are characteristic positively associated with the likelihood of borrowing or borrowed using the BNPL. All the characteristics listed in Figure 2 are not statistically significant into multivariate framework. They talked about credit scores of the people who will more likely use the BNPL. And usually it's the subprime credit scores. So those people are below between 580 and 670 are more likely to use it. And that's the average score, because they talked about they call it subprime credit score and prime credit score. So people with bad to fair credit scores are more likely to use the BNPL financing. It says during the pandemic, the average credit scores increased, in particular for consumers with below medium credit scores. A study by the Federal Reserve Bank of Boston found that the upward shift in average credit scores was driven by the decrease in credit card balances and utilization rate. Many consumers spent less and paid back some of their debt in credit cards during this time and experienced a positive shift in their credit scores. So non-BPN users, they have a credit scores on average above 700. And then that's what this graph is showing. So your BNPL users, that's that green credit score. You see it's an upshift during the pandemic because we had all that money. So we didn't really need to use our credit card. We probably paid off some of our debt. Look at the shift for credit scores that was above 700. They went down. The average score after the pandemic or during the pandemic, their scores went down, which is interesting to see. But they more likely not to use a BNPL. You know, they don't go on a buying frenzy. You know, and you know, like I said, I've been there before, trying to manage my money and overspending, buying stuff that I didn't need. So I can understand, hey, I got some extra money. Let me buy some clothes. When you're young, you go out. You go out and hang up with your friends. Y'all go out drinking or whatever. You know, so that's probably one of the things that, girl, I got me an outfit for my concert tonight. Girl, you gonna meet me at the club. You know, so I could see that being the issue. You want to be fresh. You know, you want to have a nice shoes on. So you go with the BNPL. Now, when you're older, you like, shit, I did this before. I ain't trying to be having all this debt. I'm not trying to, you know, what is it? Rob Peter to pay Paul. So you've been there and done that. So maybe you're over this type of thing. So that's probably why it maybe affect a lot of millennials or Gen Zers. You know, people that's under the age of 35, because they're still, you know, experiencing things that they haven't done before, like being in debt. And some people never learn it. You know, I know people older than me, they still are in debt, you know. So BNPL providers to approve around 70% of the applications on average, while maintaining a charge-off rate below 4%. The practice may contribute to lower average credit scores among the BNPL. If providers approve the application with lower average credit scores, some requirement compared to for the that for traditional loan products. So they probably don't charge them off. Now we got to really look into that. Charge off versus we got fees. They're not trying to charge nothing off. Have you guys ever, now I've been having my Capital One credit card forever. Now, but if you ever experience, I've heard some horror stories about Capital One if you were delinquent with them. They never charge it off. They always going to come and collect their debt. So maybe that's what the BNPL, that's probably what they kind of their mantra is. They always collect their debt. They're just going to charge you a whole bunch of fees and they're going to try to collect it if they can. Now, if they're charging fees and you have a bunch of delinquent payments, but they're saying there's still only 4% charge off, maybe they're pretty good at collecting. It says the percent of BNPL users and non-users with an open account in each credit product category for the percent of consumers with delinquencies conditional on having the corresponding product during the survey look back period. A higher percent of BNPL users have open accounts in almost all credit products compared to non-BNPL users. What's figure 4? Oh, okay. So they're saying that I don't really. Okay. Non-BPL users, I mean, this is not. What does this tell us? This graph really doesn't tell us nothing. Everybody, the non-BNPL users have a mix with the BNPL users have a mix of credit. But the delinquencies, hey, if they don't have, it seems like they don't have no student loans or mortgages. Now that tells us something. These people are less likely probably went to college. They don't have any student loans and they don't have any real assets to them. But look at this. All of them got a compare car loan. They're delinquent and they all, it's twice as many people with a car loan or auto loan. And this is for the delinquencies. Credit card. Any product. I don't know what any product. I guess that probably like store charge cards maybe. So now the delinquencies, I guess it would be a discriminatory practice. Hey, if you ever went to college, do you got a mortgage? If they say no, then maybe they don't need the approval. I mean, these are more likely to go delinquent. That's what it looks like. So and also it's saying this chart is basically showing us how BNPL users, how much they have in savings and retirement. Like savings, you see it's like 5 times as much as savings for the non-users. And credit card liquidity. You see how much versus that 13,000 versus the 17,000. I don't know what observation means. I don't have enough patience to look up the word observation. But this is a long report. This report is like 25 pages long. So they're saying that at the same time that 25% of the BNPL users with the most credit card liquidity had anywhere from 12,000 to 30,000 available to them during the same period when they made their BNPL purchases. So they got a whole bunch of credit cards that was free. That's what it sounds like, but they still chose that BNPL financing. Okay, so then it talk about credit card debt and all that. So basically, the long story short, you have a lot of Black and Latinos using these products. Is more likely women, and they're incurring overdraft fees, and they have multiple loans out there. So if you have a sister or mom that you know that's using it, you might want to just give them, some advice. Hey, where you get those clothes from? I hope you paid cash for them. I hope you paid cash for those clothes. Stop taking out all the stuff that you can't necessarily afford. Okay. How many, like I said, how many clothes do you need? Do you really need that amount? Or just buy what you need? And I'm not saying don't buy clothes. I'm just saying don't overextend yourself, because it takes you it's a really short time to get in debt, but it takes you a long time to climb out of it. And debt is a killer. You don't want to be in debt like that, a slave to the lender. You want to have good debt. Okay, so thank you for tuning in once again for another business talk. I will be going live tomorrow too. I don't know what I'm going to talk about, but it's something about financing or something like that, or credit. And you guys, thank you for supporting my channel. Send me, make sure you share this channel. Follow me on Instagram under Chawanne Burns. And I am sending all my good to you. I will talk to you soon.